it's not so hard to analyze using volume profile. As we can look at this, you just need to zoom in into our chart. We just need to zoom in into our chart. Look at there, our point of control, enter the trade, sniper entry, beautiful market move with a drawdown of how much is this? 20 points, which is just 2 pips and a profit of and a movement of 43 pips. This is volume profile made easy, simple ways. If you haven't subscribed, I don't know what you're waiting for. Okay, welcome. So here we're on the Euro US dollar chart M30. Today the date is the 22nd of November. Hopefully I'll upload this today. So we're looking at trend lines. So here you notice that we've got a beautiful trend line. Let me just highlight it with our arrow. We've got a beautiful trend which goes all the way down. Okay, with volume profile, everything is important, whether it is the wicks, opens or close, highs, lows, all of that is important. Unlike some trading strategies which look at the close, like the close doesn't matter, but the close, the important thing is where did price go, where was price, where did price touch. So we will look from this range. At this range, this is what we want to look at, right? So the rule says that the first 3 candles we won't trade. 1, 2, 3, right? So I'll put another horizontal line there. Okay, so from this we're analyzing this region, and up to this line we're not trading. So which means that it's up to there. All the volumes downward this side we are ignoring. From there, all these volumes down there we are ignoring because they have been tested by these 3 candles after our downtrend. Now bringing us, we notice that this line there gives us an entry position. And if we look at it, just look at how it behaved. It went up by just 2 pips and dropped down by, I don't care how much our take profit would have been hit in this region. Let's look at this downtrend, right? This downtrend up to there, I'll just put it there. This downtrend from there to there, right? And our first 3 candles we don't trade. 1, 2, 3, right? So it's not how it's done, but I'm just doing this for the sake of this video. 1, 2, 3, those ones we don't trade. And we've got our line there. Since we don't trade those, which is those volumes over there, which our first cluster is this one, right? This cluster, it becomes null and void due to this candle there, which my mouse just clicked. As you can see it, I'm clicking at it. This candle tests these volumes. So these volumes become null and void and we do not trade them. However, if you're using limit orders, your trade will get activated right there. So if you're using limit orders, you activate your trade right there and it goes down, it hits your take profit. So our next volume cluster is this one. Now this one is the one which I would most likely put a trade on and trade. Let me check. Okay, also the first one I'll also trade because of this candle over here. This candle over here. So we notice that market comes down, market goes up, right? So this is actually a low point, and this is also a low point, which means that here we've got some sort of a support, and our trend breaks the support, so support becomes resistance. So which means that this mark here, which we can also see there's a blue line there, if we were to actually zoom in our chart, there is our blue line, as you can see it. This is our median point. Even though our graph doesn't touch it, as you can see, if the point is respected, the one which will actually be traded is this one. If we have a limit order, so this was just 1 pip away. So those who be trading manually will not have entered this trade. Those who trade using limit orders would have entered it, and these volumes now become null and void. And here, right, from here to there, we notice that here in our history, the market never respected any of those levels. So when price is coming up here, we too won't respect. Now let us look at this next trend, this one, right? Let's look at this next trend and analyze it a bit. Let's just zoom in. Okay, so we have zoomed in. The first, from analyzing our market up to there, so the first 3 bars, 1, 2, 3, we do not pay attention to them. So let's just put our 1, 2, 3. Okay, it's 1, 2, 3 there. So it's these volumes. Okay, so let's just do this. These are the volumes which we are ignoring, right? So which means that this volume there, this is just 1 pip. So if we are trading manually, these volumes will be tested and we will not be trading this mark right here. Let me just put a horizontal line. We will not be trading this one. So okay, for the ones we're not going to be trading, I'm going to put them as black and a bit of thick, right? So manually we will not be trading these, but these will be traded if we're using limit orders. So which brings us to this one here. You notice that we've got several at the same level. Look at the previous, we only have 1, but for the next one we have several at the same level, which means that we do not have a satisfying level. Why are we trading this first one? Because of these levels right there, and also this movement there. That is the reason why here we will be trading due to a limit order if we do not delete the limit order if we're trading manually, because we can set up these trades by limit orders and we won't be in the chart due to set and forget principle. So once this has been tested, which means that the available volumes, none there, which brings us to these ones here. So we notice that these ones, the point of interest we have is based there. Let me just put a triangle. Is based from this bar and these lows here, which will give us, and also this one, which will give us a region of interest from there to there. So we'll be finding volume clusters in there. So with these we need to select one which we can trade. So this one we will not quite, I won't based on this one that much. So this we can easily delete this one, and for this one we can notice that this low comes into this region, so we can also just delete this one and take and deal with this low, which brings us to this point right there. So I'll just take this mark, bring it there, and you can notice also in the previous it has also the same highs as that one. So this one will just change its color. Let's just make it a color which we don't have in the screen, blue, and we won't make it thick. We'll just reduce its size, blue. And here we notice that the chart comes, enters it through something what we call sniper entry. Once again, beautiful reaction to the market, and all these levels have been tested now, which, let me just delete this line, which brings us to this point of this cluster. This cluster is also part of it falls in this resistance zone. So here we expect it to be a support. So we notice market hasn't really touched this level yet, and there is a difference of 2 pips from above. So it's either, if you're trading manually, these levels, these bars here, you have already cancelled out this level, and you notice this level, the one which I'm now showing, 1.18463, it's about 3-4 pips thereabout. It has a relationship with this point here, so we might trade these levels as well, but with me, I will not be trading them. I'll be trading something like this point here, where we've got our point of control there. These are the levels which I'll be trading, or with somewhere around here, even though here we've got 2. This is based from this point, that we've got movement up there and movement down there, which is a resistance, and resistance becoming support. So that is the reason why I'll be trading it here. It's basically that simple. So we can actually find another high. Let's take this uptrend, this short uptrend. We notice that, okay, now this uptrend, it's an uptrend in a smaller time frame, so you have to zoom down to your 5-minute chart, and you notice that it is by our point of control. It actually activates by our point of control, and we've got a nice reaction there. The smaller the trend, the smaller the time frame you use. So here, the one with the 3 bars which we neglect, it's because the trend is quite huge, which means it's a visible trend in the higher time frame. So higher time frame, that's where we count. But with these ones, with such small trends like this is just a 12 pip trend. We go to smaller time frames. And here is another huge trend here. As you can see now, this is a huge trend, which means that we're sticking to the current time frame which we are at. And if you notice this trend, downtrend movement, it's one of our volume profiles which we talked about in our earlier videos, where if you look at our point of control right there, point of control, if we take our point of control, I think this is a losing trade. Oh, it's not a losing trade, it actually goes and hits our profit of 10 pips, because this just misses our stop loss and comes and hits our take profit. So we would have entered right there. Oh, but this doesn't achieve our 3 pips, which is our 3 candles, 1, 2, and our third candle down, which actually activates the trade, which means that we've got no trade here, even though it's a profit trade. We've got no trade here, but due to other volume profile traders, due to the length of this candle, they would have actually entered the trade right there in the second candle as it was coming back down. Alright, so let's go back. Okay, let's pick another chart. So if you notice, I like to use something which is closer to where the market is actually going. Let's pick another chart. Let's just say USD JPY. Okay, let's load. Okay, it is loaded. So we've got this beautiful short trend there in our lower time frame. Let's just put our volume there in our lower time frame. So we notice that we've got our point of control right. The market hasn't returned to this level. This could actually be a good place to actually enter your market at that level there, but don't take my word for it. You do this at your own risk. I'm not the manager and I'm not trading on your account. So that could be a good level to look for some short positions. And also we've got this downtrend here. If you notice, it's a type of a letter B, right? So this trend, we notice, this is the spread, mind you. Sorry about that. This is the spread. This line and this one. Let me just remove this such that it doesn't show us ask lines. Is that most of the time I like to see these ask lines and bid lines. Okay, so let me just remove that. Okay, ask and bid lines have been removed. So we notice downtrend, but here we've got sideways movement. We've got sideways movement there where our point of control is found. So we can actually just remove that sideways movement and focus on our downtrend. So we notice that we've got our point of control right there. Market goes up by just 5 pips from our point of control. Market goes down by 11 pips, hitting our take profit of 10 pips. As we stated on earlier videos, what we tend to like to target. We've got these are the uptrend here where we also form another B, which we discussed in our earlier videos. And we've got this point there. We notice that these volumes there, let me just put a box. We notice that this point there just slightly misses it and the market moves up, hitting our take profit. But those who are using limit orders, this trade will actually activate there and take you up by 5 pips and then drop you down again by 3.3 pips and then take you up to come and get our take profit, which means this trade is actually a winning trade, but it's not a sniper entry as I would have liked it due to this candle here, which I'm actually highlighting, which comes back and swallows up our entry. It would have been a nice sniper entry position, but well, you win some, you lose some. But okay, that was a winning trade, and I mean sniper entries. You win some sniper entries, you lose some sniper entries, but both will be in profit. But not that I'm saying that you always be in profit. Sometimes you will make losses. And I'm trying to find a losing trade here. Okay, so you notice that market comes back here, it touches 1, 2, 3, and then the market is now here where it's just playing around the levels of where this candle, the one I'm highlighting right now, this candle tests some levels and cancels them out, and all these candles which are following are inside this candle. So all these volumes are not all these volumes are cancelled out, but this one here, we notice this. Let me just put a box. We notice that these lows here are actually coinciding with these massive volumes here, which are actually the ones which break. So this would be another good place to search for selling positions on your UJ, on your something they call the Ninja. There's different names. There's a lot of names. So also, yes, it is a downtrend right here up to about there. So also we notice that this line which has been drawn, this would be a good place to search for short positions. Short positions. Let's just go back a bit there. So market went up. This was an uptrend. This is a macroeconomic news candle. We don't like to trade that, so we'll just ignore that. We don't like to trade macroeconomic news. We've got a beautiful downtrend which came down up to there. Market, as you can see, these volumes right there, we had an entry there. So those who trade with limit orders would have actually entered this trade and it would have come down and hit our take profit, closing us in a win. Okay, why am I not getting losing trades? Okay, like the reason why I want to get losing trades is because I don't want people to start believing that you don't lose in this with this strategy. With this strategy, you do lose, like any other strategy. Okay, this is another winning trade, sniper entry, not what I want. Okay, so okay, see now these clusters here. Okay, let's say we're in the smaller time frame, right? Let's say we're in a smaller time frame where we had actually analyzed these volumes. So we notice our point of control there. So in our smaller time frame, you understand that I've been saying 10 pips take profit for the 30M for the M30, but here we understand that we'll be trading in a smaller time frame. So if we actually enter this, it actually goes down by 11 pips. Actually goes up by 4 something pips. So depending on your stop loss and take profit, also they could be a winning or losing trade. I believe here we might get a losing trade. So I want to spend some time on this losing trade. Okay, this point of control has been tested, so we want to come to this cluster here. Okay, so this cluster here, perfect, it's a losing trade. This one, where we've got our VWAPs and our median are all at the same level, about the same level there, right? So let me just put a trend line from the point of control to where the market actually was. Okay, there. So we noticed that our market came here, it came down by about 8 pips. So here we would have actually entered long, and then it goes into our direction by just few pips, then it comes down and hits our stop loss, and it then continues in the correct direction, right? So this, if you look at the previous history, we notice that we've got an accumulation just about the point where we lost our trade. So let's just look at these volumes here. So I'll just have to place another volume profile indicator. So once we have 2 volume profiles, you want to change the identifier such that you don't get them confused. So I'll just name it QWERTY, give them different colors, right? Give it different colors. So there it is. There it is. So I'll just place it there. Indicator, volume profile, properties. I want it left inside. That's how I prefer my volume profiles. There's another property here. Okay, point scale is okay. Close like this, right? So we notice that we've got a blue line there. If you look at our second volume profile, which is the same point, which is the point of control there, which is the same point as this level, but it gave us a losing trade. Now this is a good example to show you that do not believe that this strategy is some sort of a holy grail. You will lose trades. You will lose trades, right? So it's always good if you're told the truth, told that you will win trades and you will lose trades. Here is a typical example where in the previous accumulation we have a certain point, and this point comes and gave us a losing trade here where we would have lost money by following the rules, right? This just tells you that every trading strategy loses at one point or another. So let's look at another uptrend. We're dealing with uptrends here. So basically we look at uptrends, then we look at clusters, we look at our history to identify points where support became resistance and resistance became support. So here we've got this uptrend, that's not the uptrend. The uptrend actually starts from here. That is there's a lot of noise in this. The uptrend actually starts from here where we've got these two lines. The first line, candle 1, 2, candle number 2 actually touches it, so these volumes there are cancelled. It comes to touch these volumes there, which drop down by 9.4 points, which is okay, because our stop loss is 10 pips, and go up by about 40 pips, hitting our take profit. And also here, soon after news, there was a lot of news around this period. I wasn't trading here. I had limit order trades which didn't go well. So market comes, enters there, it goes down by 14 pips, hitting perfect sniper entry. If you're trading manually with this trade, you will cancel out your order because these volumes have been tested. But if you're on limit order, the following trade, the following candle touches it, activating us, coming, hitting our take profit. And here we also made another loss. Observe, perfect, nice beautiful loss, right? Nice beautiful loss. Now if we actually come in and we actually analyze those volumes which gave us that loss, they are there. They are a beautiful losing position, right? Why? Because every losing position tells us something. This was a very highly news active session, times of news, but we noticed that the market then straightly bounced, coming to hit our take profit. If we analyze higher volumes, if you notice from this cluster, we come to this cluster there, which would have gave us a sniper entry right there, going up by just 6.2 pips and coming down to hit our take profit, which is a 10 pips, but it drops with a 20 something pip move. So this is volume profile, ladies and gents, the trend setups. I really do hope you are getting something out of these videos. I know there are a lot of strategies out there. A lot of people have wasted a lot of money buying certain strategies to try and understand how they work. You can do all that. I'm not against that. I've never bought a single strategy in my life. I work with the principle that everything is for free in the internet, and if you know how to find it, you can easily get it. Ladies and gents, this is Dendazi signing out. I hope you do enjoy. Let me just put, before we go, let me just put this volume profile. This is the fixed volume profile. I do not use this. I do not use this. Some people actually use this and they're actually very profitable. I do not use this. It doesn't give me my setups which I want. So this volume profile is also one which is complicated for me. I'll make a video about it. I'll make a video where we'll be talking about it. However, if you look at this day up to there, we had a downtrend, uptrend, and then major downtrend. So we can easily, the same principles apply. I'll make a video on the fixed volume profile. This is the flexible volume profile, the one which I'm talking about. Hope you understand. Any questions, feel free to ask. Feel free to share your thoughts. Want to contact me? My contact details are somewhere in my channel. You search, you will find them. I'll try and put them in the description for you. I hope you enjoy and have a profitable week.